All right. What is up, traders? What's up, tycoons? So much to talk about today. An apple a day doesn't keep Nvidia away. And what we're looking at here is Nvidia in dark blue, and then you've got XLE. So Nvidia is now larger than the entire energy sector as a whole, and it's catching up to Apple and about to overtake Apple for the number two stock in the market. Then you've got semiconductors here just absolutely going ballistic. And if you take a look at parabolic curves, all right, and obviously these moves have been parabolic, the big question is when are we getting to the sell point, right? I mean, you take a look at Cisco, okay, this is Cisco back in the dot-com bubble. You take a look at SMCI, obviously very parabolic, Nvidia very parabolic, SMH, the semiconductor ETF, very parabolic. All right, you've got 100% of S&P 500 sectors were above their 50-day moving average. This was yesterday, all right? And then you've got yesterday, we also had the 16th all-time high for 2024, which was right at the average of 17.6. Today, we did make another new all-time high, so we're at 17 now. We'll break down why all of this is important. We had the job data come out today. We'll break that down and go over some of the intraday volatility, as we did see a really big sell-off here. But a large part of it had to do with something that I keep bringing up to you guys, right? And it's the gamma levels and it's the call wall. So we'll break that down in today's video. We did actually have a nice intraday scalp here, getting in right around the bottoms and catching this move to the upside, taking some profit on that. It was a really nice trade. And then we'll break down the SPY, the S&P 500, just overall, right? And taking a look at this massive, parabolic move that we've really been seeing in the S&P 500 as a whole, as well. Breaking it all down, we've got some new ETFs I want to go over with you guys. I really like ETFs. And then we've got politicians added again. Okay, so I'm sure everyone knows by now about Nancy Pelosi's Pan W trade in Palo Alto, but we've got Republican Josh Gottheimer. I'm not sure how to say it. This guy's just as good as Nancy Pelosi, and he's buying $27 million worth of Microsoft. All right. Then we got crazy news going on with Boeing and with the airlines again. I mean, I really just can't even believe that this is possible. We'll take a look at UAL today. But as always, the content provided on this channel is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter for you guys, Investment Intelligence, giving out free trade ideas, free finance content. And these are what the trade ideas will look like. I try to sprinkle in one trade idea a week, right? And I'll highlight the conditions on the chart, go over everything it is that I'm looking at on the actual chart itself, breaking it down for you guys. There's a website associated with it. So you can go back and check out some of the previous newsletters. You can keep up with the newsletters with the blog, through the website. Or if you feel like it's something you want, you can sign up and get those directly to your inbox. You can also join the Investment Intelligence Discord. These are some screenshots from some of the different plays that we've been in over the past month. It's $10 a month. There's a link in the description for that. That's where you get all my analysis and all my different trade ideas, right? A week or two ago, posting the setup on iClean, right? This is your global clean energy ETF, falling wedge, cup and handle. You can see iClean was a very nice play right here. Also going over Run, which is a solar ETF inside of that, or solar stock inside of that ETF. And then INTC was another one. Intel, just highlighting this key zone and the many times previously that we've bounced off of there. There was also a huge block order for over basically 1.5 million shares at $43. Um, and Intel was a very nice play for us. Okay, so these are just a couple examples of some of the most recent trade ideas. There's over 20 different swing trade ideas at least a week, as well as my intraday analysis on the SPY and the market, and many other valuable resources, such as being able to see gamma levels, okay, like we talk about in this video, dark pool levels, as well as custom scripts, indicators, many different things. So sign up for that. Link is in the description. $10 a month. Now, let's talk about this. So an apple a day doesn't keep Nvidia away. Apple is not so magnificent, okay? And they're talking about renaming the Magnificent Seven to the Fab Four. The reason being is because Apple, Tesla, all right, have not been performing very well at all, okay? Google hasn't either. So, those are the three that they're kind of talking about taking out of the Mag 7 and calling the Fab Four now. And Nvidia is really just, it's going parabolic, guys. I mean, Nvidia, just a single stock, is now larger than the entire energy sector of the S&P 500, and it is very close to overtaking Apple. All right. Apple lost its spot as the number one largest stock in the S&P 500 to Microsoft, and Nvidia is coming for Apple, and it's really trying to really knock Apple down to that number three spot now. And when you take a look, this is a ratio chart here of the semiconductors versus the market. Okay, so this is a SMH SPY semiconductor ratio chart. And if you take a look, since the dot-com bubble, since 2000, we haven't seen market outperformance in the semiconductors. We just now broke through that here recently. And this is just a huge parabolic move. All right. And the larger the base, the larger the rip in your face. And that's exactly what we're seeing, right? I mean, from a textbook standpoint, you got a very clean breakout, retest, and just gone absolutely bonkers, going straight up. Who knows where this thing is going to pull back at, but the target is still much higher right now. Um, and I wouldn't be surprised if things continue, right? Maybe if we do get a little bit of a pullback here on this ratio chart, you'd look at the 0.3972 area. Maybe that's where you want to try and dip your toes, have a hard stop underneath there. If we were to get some type of a pullback in semiconductors. But let's talk about these parabolic moves. Now, you typically tend to see about 4 bases, and then you see one last parabolic move, and then you kind of break through that. And this is what Cisco looked like back in the dot-com bubble. You had 1, 2, 3, 4 bases, right, going absolutely bonkers, parabolic, and then boom, you break through, and that's your sell point. This is SMCI right now. I mean, this one is insane, guys. This one's outpaced Nvidia. And we've got 1, 2, 3, potentially 4 bases here, continuing to just absolutely rip in your face to the upside. We've got Nvidia. All right, you can see 1, 2, 3, 4 bases here previously, and then there's the sell, 1, 2, 3. And now the question is, was this 4 over here, or is there going to be a fourth? You're going to lose a lot of money trying to call the top. All right, and I'm sure anybody that's been trying to short semiconductors or short Nvidia has realized that by now. So there's no sense in trying to call a top. When things are trading at all-time highs, there's no overhead supply. There's no previous supply, previous resistance. Okay. Overhead supply is what creates resistance. There's trapped buyers there that potentially can sell back at break even or for a little bit of profit, if they come back to some of those previous tested levels. And we're at untested levels, right? We're in uncharted water right now. So trying to time a top, I mean, really everything now is just going to be price targets. There's different ways that people come up with price targets, whether it's fundamental, whether they use Fibonacci or different things like that. I personally like using the Fibonacci. But just because you hit a Fibonacci extension at all-time highs, it doesn't mean that now it's automatically a sell. It just means that you hit a target, right? And this is the semiconductor space as a whole, right? And you can see 1, 2, 3 bases here. And I mean, we really still haven't even gotten a fourth base. So it's tough to say, guys, when these things are going to top out. Now, does that mean that it's going to continue going forever in these straight lines? No. Eventually, these things are going to either correct via price and have a pullback, or they're going to correct via time and just start trading sideways a little bit, right? If we look at Nvidia, you can see this huge sideways movement that it had for many months, right? For a 4 or 5 month period, it just really traded sideways. And that's what I mean by a correction through time, right? Where you're not really getting a massive correction or pullback or crash, but really it just kind of zones, consolidates sideways before its next move to the upside. So we'll move on from that now. I'll move on from semiconductors. And overall, the market was completely frothy. Yesterday, 100% of the S&P 500 sectors were above their 50-day average. Okay. And that's just frothy. All right. We're talking staples. We're talking utilities. We're talking all these different sectors of the market. And we just hit our 17th all-time high, which is right at the average. Okay, now the S&P 500 started in 1957, and yesterday was the 1200th all-time high. Today we just made our 1201th all-time high. The average is right at 17.6, and that may seem like a bearish case to you. All right, if we're at the average, meaning that like, hey, you may look at this and say, oh, well, we're already at the average. We're probably not going to hit any more all-time highs this year. But this is not, when you actually take a look at the graph and take a look at the chart, Look at how many went up to 60, 70, 60, 70. We've got them in the 30s here. We've got them in the 40s here. So 17 is the average, and that's because there's lots of low years, right? There's lots of years in here that are very low and years where we haven't made all-time highs. And if the median, all right, the median to me is somewhere around this 30 to 40 range. Okay. And so, we're not going to go into elementary school and go over what an average is and a median is and the mean, median, and mean, all these different things. But let's just say that in my opinion, I think that we're gonna come around to closer to 30 all-time highs in the year of 2024. Okay. Now let me know in the comments down below. Do you agree with that? Do you disagree with that? I'd love to hear you guys' thoughts. All right. Now, today we did hit all-time highs in the very beginning of the morning. All right. The NFP came out, unemployment rate rose. Okay. So that's good. That's what the Fed wants to see. They want to see the unemployment rate rising. All right. The bears are going to tell you that this is an issue. Right. And it is. Right. We're at this point now where, quote unquote, bad news is good news. Okay. But bad news can still be bad news and good news can still be good news. So, the unemployment rate rising, there's going to be a point where the market starts saying, all right, well, this is no longer bad news is good news. Hey, this is bad news and we need to start paying attention to it. So that's one thing that you really need to think about. Okay. But the job report did come in hot. It came in at 275 above the expectations of 198,000. So if the job report came in hot, why did the market rally? Well, as I mentioned, the unemployment rate rose, but the January jobs report number was revised lower. So it was initially at 353,000 and it was changed to 229,000. So it was revised lower. So the really hot one, the one that came in a lot higher above expectations, it really didn't even come in that hot, is what they're saying. It was actually revised lower. And I wouldn't be surprised next month if we see the same exact thing happen for February, where these numbers of 275,000 potentially get revised lower. Does this mean that they're cooking the books, right? And that the books are cooked and that, some of these numbers are fudged? We're not here to necessarily go over that, right? I mean, at the end of the day, the market, there's many algorithms, okay, that are just programmed to buy and sell based off of data and based off of numbers. Now, whether or not the numbers are cooked, falsified, or messed with, that's a whole nother story. Okay. The algos, they're going to hit buy or they're going to hit sell based off of what the numbers that come out. All right. And that's what you need to realize. And that's what's important if you're someone that's investing in the market and trading in the market, is not to get too much into conspiracy theories, but rather just focus on, what's actually happening and why it's happening. Okay. Now, if we take a look, the call wall, as we've mentioned many times, all right, the call wall, $515. Now, why is this important? Okay. Number one is this is going to be huge, huge resistance. Okay. You can see resistance here, resistance here. We finally got above, but we weren't able to maintain. We pulled back. And once we did get above, what happens is a gamma squeeze, right? Which is number two of why they're so important. And I told people in the Discord, hey, if we are able to hold and maintain 515, right, that's going to cause a gamma squeeze. And most likely we're going to see a $1 to $2 pop in the S&P 500 SPY ETF. And that's exactly what we saw, guys. We literally went from 515 up to about 517, almost 518. Okay. We might have even hit 518. I'm not even sure. Yeah, I think we did hit 518. So we just saw a quick squeeze, guys. This was very quick. Look at the fashion, right? It's not consolidation, it's not choppy. It's a massive parabolic move to the upside, right? And we're talking massive on an intraday basis for something like the SPY. Okay. A $3 move in an hour or two is a big move in a very quick amount of time. And so, a lot of people were caught off guard by this, right? And once you start to understand these concepts, right, and understand what's going on, then a lot of this price action will make a lot more sense. And this flush here that we saw makes complete sense here as well. Okay, so let's explain a little bit, right? The reason that the call wall is so important is because this is an area where a lot of people have gamma exposure via options. Okay, and so meaning that, like, there's a lot of open interest at the 515 strike price. So if you're buying something known as out of the money, so let's say SPY is at 512, and you buy the 515 calls and SPY goes to 515, you're going to be sitting on some very nice profits. And so a lot of time what happens is people start selling those, right? And they start taking profit around the call wall because they're taking profit. Now, if they continue to hold there and then price action also holds there, what happens is market makers have to hedge themselves, right? And so what this means is that, for every option contract, it's equal to 100 shares. So, if there's 10,000 open interest or 40,000 open interest or 20,000 open interest, you multiply that times 100 shares per contract. That's what market makers are coming in and hedging themselves with, just in case people want to execute these orders, right? Because if someone holds an option to expiration and it's above the strike price, well, that means that they're going to buy 100 shares. Now, who are they going to buy it from? Well, oftentimes it's market makers. So market makers have to buy these shares. That way they have the shares to sell to the customers, right? And so that's kind of the whole name of the game. And so what happens is once you see that gamma squeeze, you see a huge inflow in price action, a quick spike in price action. And this is all from market makers having to hedge, right? We dipped up above. Okay, you can see there was profit taking here, profit taking here. We went up above, but we weren't able to maintain that level. We came back down. And here at this moment, this is when market makers were deciding that, hey, we have to hedge ourselves now, and that's when we saw the gamma squeeze. We saw the huge move up, right? And so it wasn't like we are seeing a whole bunch of new money buyers from retail necessarily coming in and trying to buy up here, right? If you look at the volume notes, right, on the right, you're seeing there's not huge volume up here relative to the volume down here and over here below 515, right? Most of the volume was at 515 or below, and there's a reason for that. All right. And so then what happens? Well, right, we see the gamma squeeze up there, but now the question is, well, is there new money buyers, right? And if there's not new buyers up here, price is going to come down on the auction book until there's new buyers. And we see it continue to come down, continue to come down. And what happens? We fall back below the call wall. Okay. You see, fall back below the call wall. We try and push back up towards it. And what happens? Well, at this point, this is now market makers getting rid of all of the shares that they bought here to really push price action up. And that resulted in the SPY going up $3 in a very rapid amount of time. Now all of that is being unloaded, right? Well, now they're saying, hey, well, now we're no longer have to worry about being forced to if people want to execute these options at 515, buyers were not able to hold 515, and you just see a really rapid move to the downside. I mean, this is crazy volatility, guys. In the morning we went from 512 up to 518 by midday before noon, and then from noon to 2, right, we saw a 7-point drop in the SPY, right? We go from 518 all the way down to 511. All right. And, to me, I was saying, I was understanding how this is working, right? A lot of it's making sense. I was actually sleeping during this entire sell-off here with my baby son. Those babies love those naps, and, you know, those naps are the best, right? Then oftentimes you fall asleep with them. And so I woke up and I was like, man, things are selling off right here. And once I just tried to rationalize it after waking up a little bit, I started looking at the opportunity. We had a big trend line down here. I pointed out to the members right over here, bought into some call options. I said, hey, there's a big sell off there. I tried to explain the whole gamma thing that I just explained to y'all, and I was looking to see if we could get a breakout. I got into the 512, 513, and 514 call options, and you can see the 514s went all the way in the money. We went up to about 514.25. So I took profit on those. Very nice profits, very quick trade. And you can see that a lot of people also had kind of the same idea. We moved back up in here. And once we got up to 514, you see we actually sold back off. Now, I know that was a lot of intraday commentary. Maybe not everyone's interested in day trading, but today was a very volatile day. And so, if you're not experienced to some of these concepts that I talked about, maybe a lot of this didn't really make sense to you. But, hopefully I did a good job of explaining, some of these levels and what really happened in the market. Now, overall, we just printed a doji on the weekly chart. This is not really bearish or bullish. It's an indecision candlestick. Oftentimes, these can be the beginning of a reversal, okay, because the market's, undecided right here. And if we start to see a red weekly candlestick next week, well, it's very possible that this rising wedge here could break. Now, the put wall, okay, so we talked about the call wall. Put wall is the same thing, but it's support, okay, versus resistance. Now, the put wall is very far away from price action right now. It's at 480. So, there's lots of room for us to correct, and a pullback to 480 would make a lot of sense just from higher low standpoints, right? We have a low here, and it's really just been a straight up move. If we were to get some type of a pullback to 480, I think that would be perfectly healthy and nothing to panic about. Now, short term, you may see a lot of panic if something like that happens, right? Because that's going to be almost, a a 40-point drop almost, about 31 points from where we're currently at. That is going to be a pretty big drop in a lot of people's eyes, and you're going to see all the bears come out of town and come out of the cabins and really just start going off and telling you that, hey, things are about to crash, and we're going much, much lower. All right, but just keep in mind from a perspective, even if we were to pull back all the way to 480, that's still very healthy territory for higher low, even 470. This was old supply up here, and we just broke out, didn't even really try to retest it. So if we break out and retest this 470, 480, I'm probably going to be a buyer in that area. Not too hard to define your risk, buying in this area and putting a stop, slightly below that zone. All right. But in the meantime, the zero gamma level was 504. So above 504, we're still in positive gamma territory. Okay. And 507.5 is really going to be your point of control over the past week or two. Next week, we'll see if the call wall, the zero gamma level, and the put wall change. But these were the levels at for this week that we're maintaining and watching. So subscribe to the channel. I'll keep you guys updated on all the gamma levels that I'm paying attention to and updating them for you guys as well. But short term, 507.5, 504, those are going to be the areas that you want to see if bulls can hold and maintain. 515 is that resistance level above there. It's just going to be a matter of, are we going to make new all-time highs again? All right, a little bit longer term pullback zone, 480 to 470 is still healthy territory. Okay, now we did just get two new ETFs. We got XDTE and QDTE. These are the first ever 0 days to expiration option income ETFs. Both funds offer a new way to potentially generate high income by implementing 0 DTE covered call strategies on the S&P 500 and NASDAQ 100 respectively. Now, I'm interested to see how these play out. In my opinion, selling 0 DTE call options is just not worth it. Oftentimes for the premium that you're putting up for collateral to sell those, is just not worth it. And then if you do get a parabolic move, let's say the SPY goes up 1% in a day or something like that, then the premium that you received, for the collateral that you put up is going to go up a lot in price and in income. And unless you plan on letting the shares that you own get executed and sold, those 0 DTE things, they can run up anywhere from 200 to 500 to 1,000% a single day. So imagine you sell one for $100, and then the SPY rallies 1%, and what do you know? Now that thing that you sold for $100 credit is now worth 1,000. So in my opinion, I like trading and buying 0 DTE, whether it's call or puts, and not so much selling them. But I do love these ETFs and what they've been doing with the covered call ETFs. So I'm interested to see, maybe I'll dive in a little bit deeper into the strategy behind it, see what their strategy is, what they're implementing, and then I'll be interested to track the performance, throughout 2024. Now, big news in Microsoft. Okay, this is Nancy Pelosi's biggest competitor when it comes to politicians trading. This guy has a really, really great track record, and he just bought into Microsoft. Microsoft still looks really good. It definitely looks a lot different than something like Apple, looks a lot different than something like Google. We already did hit the intermediate price targets here of 421.36 for our smaller wave 5 here. We'll see maybe if this is going to extend. 397 to about 400 is a pretty key little zone here. All right. And so, if we dip back there and break through there, 384, 361 are going to be your next areas of support. But if this guy knows what he's doing and this stock continues to rip higher, 421 and 435 are going to be your next targets to the upside. This chart here was another one that was posted in the Discord as one of just the analysis and trade ideas. Back in December, January, we were watching the setup right here. Very, very clean. Old supply, old resistance becomes new support. We also had a nice wave 4 setup triangle pattern here. And anytime I can find a wave for a triangle, oftentimes these work out to be really, really great trades. And you can see, once it broke out, Microsoft really was just running off to the races. Um, and we got to talk about Boeing, okay? United Airlines Boeing 777 loses tire while taking off from San Francisco, and United Air flight rolls onto grass in Houston Airport. Yeah, I just can't even believe this is real, guys. I mean, honestly, this is like scaring me a little bit to go flying. Some of the people in the Discord got some puts on United Airline, shorted United Airline due to the news. I was actually looking at them previously in the week before all of this bad news started coming out, and it was looking good, right? I mean, above $43, I liked UAL, and it was looking good. Now we're pulling back to the support line. We've tested it 1, 2, 3, 4, 5 times now. So if we break below 43 on UAL, which it just so happens that support and this trend line here are lining up with each other, things are not going to be looking good for UAL. Now above 43, I do like this one for long. So we'll see if this one can bounce or consolidate and move up higher. But if it loses 43, I think most likely it's going to continue heading lower. All right, that's going to wrap up today's video. Don't forget to join the Discord. That's where you get all the different analysis, all the different trade ideas, as well as custom scripts, indicators, being able to see gamma levels, dark pool levels, many other things. You can join that using the link in the description for $10 a month. You can check out the newsletter, check out the website. If you want that sent to your inbox, you can sign up via the link in the description as well. And if you enjoyed today's analysis and you ever want you feel like you need that one-on-one personal touch, you can check out my Ko-Fi page, click on the commissions tab. There's a link in the description for my Ko-Fi page. And in that commissions tab, you can book a 30-minute or a 1-hour session. We can do day trading dynamics, swing trading strategies. If you got some questions, different things like that. A lot of people hit me up for options as well. And there's also this little buy a coffee button. It's basically a way to leave a tip or donation for all the free valuable content that I do put out there. And if you ever have a specific YouTube video that you want me to make for you guys, or topic or stock or something like that you guys want me to do a deep dive on or do some analysis on, hit me up on the Ko-Fi page. Okay, you can click on the commissions tab and request a YouTube video there as well. That way it doesn't really get lost in the comment section. I appreciate you guys watching the video. Make sure to smash that like button, subscribe to the channel. If you made it this far and you enjoyed today's video, most likely you're going to enjoy this next video here as well. So be sure to click on that one.